What's going on, world? Thank you for watching and listening to another episode of Insightful Principles. In today's content, I really want to talk about interest rates as well as going through some of the more recent inflation numbers that we're seeing with the consumer price index, and also really talking about what's happening on the producer side with the PPI, which is the producer price index, and then also really just having a conversation around what they expect as far as within the next Fed meeting in June and where we're seeing where interest rates could potentially go. But as always, if you all can do me a huge favor, if you could please like, subscribe, and share this video, always greatly appreciated. And don't forget to hit that notification bell below so you can always be notified every week when I drop content. So the recent CPI numbers for inflation came out on Wednesday, May 10th of 2023, and it actually showed that inflation right now year over year is up 4.93%. Now that has been going down significantly from what we've seen over the last year. I know with the more recent print in March of this year, it's down from 4.98%, so it's still at 4.9%, but we're starting to see some downward pressure on just the CPI going down. And some of the notable increases within the inflation report was shelter, gasoline, and also used car vehicles. And some of the notable declines were in new vehicles, fuel oil, and also food at home. So it is showing that we are seeing some progress as far as with the Fed fight against inflation, but it also is still showing that inflation could be a lot more stickier and that it's going to be potentially difficult for the Fed to get down to that 2% annual inflation rate that they're aiming for. And as you can see here from this chart here, this really just is showing the inflation rate, just kind of looking at the historical data of what we've seen in the past. And as you can see, even from January of this year till now, in January where we're somewhere around 6.41% for inflation, and then if we look more in December, it was sitting somewhere around 6.45%. And we've been kind of steadily declining since then. But I definitely remember around this time last year, as you can see, in April of 2022, inflation was at about 8.26%, and we see it had peaked in June of 2022, where it was somewhere around 9.06%. So it definitely is the progress that the Fed is seeing, and even just for myself personally, seeing that your grocery bill isn't as high, your gasoline bill isn't as high either. I remember gas last year somewhere close to $5, and now we're much lower, around $3. So I think that's very good for the economy. But then again, the inflation fight is still a constant fight, and it's certainly not going down as fast as the Fed would like. Now, another thing that the Fed is also looking at that I've talked about before on this channel is the PCE, which is core inflation, which is a very important indicator with just kind of getting the understanding of the changes of consumer prices and just the change in behavior when it comes to consumers and how they're spending their money. And it also identifies what the consumer is, buying with goods and services throughout the economy. And some of the reasons of why this is such an important indicator is because it also accounts for 2/3 of domestic final spending, and is also utilized as a primary engine that drives future economic growth. This is an indicator that is very important, to be able to look at and pay attention to. And the PCE, the core inflation, that has been coming down since the beginning of the year. As you can see from here, in March of 2023, the PCE was 4.2%. And then if we look more recently, within the past, we've kind of seen that it was much higher. In, for example, December 2022, we were at 5.3%, and it's kind of just slightly decreased since that point. Now the next core inflation report will be coming out May 26th of 2023. So we do have a little bit more time for that, but definitely something important to pay attention to. And then also, I think the PPI, the Producer Price Index, that actually came out today on May 11th of 2023. And this is really showing how prices are changing more from the producer side. We're looking at more of the manufacturing aspects. And this has also slowed down. The April Producer Price Index actually showed that producer prices are only up 2.3% year over year. And if you look kind of more at the history here from this chart, it just kind of shows you like at January we're at 5.7% with producer prices, and it's kind of slightly taking a good dive down. So I think that also is showing that there's some pressure that is alleviating when we think about from a lot of the manufacturing, wholesaling, when we look at those goods being delivered to the grocery stores, all of those different prices are starting to go down. And some of the increases that showed within the PPI was warehousing, gasoline, and food. So that was kind of what kind of pushed it a little bit up. But I think overall it is good to see that in combination with producer prices and consumer prices, things are starting to somewhat go down, which is I'm sure helping out a lot of families and just businesses out there. Now, another aspect that I think is very important to pay attention to is just kind of where interest rates are at in the economy and where they potentially can go moving forward. And as you can see here, this is kind of really just breaking down and this is the CME Fed Watch tool. They have a probability of what they expect that the Fed may potentially do within the June meeting, whether if they're going to keep rates at where they're at now, or if they may potentially increase rates. And it actually showing right now that there's an 88% probability that they're going to keep rates at 5.25. So 5% to 5.25%. And then there's 11% probability that they may increase it to 5.25 to 5.5. Which is about 5.25 to 5.50%. So it is good to see that. And even if we kind of look at the market, it's potentially pricing in that the Fed could be at a pause right now when it comes to rates, but that's yet to be determined. I know with the more recent Fed meeting that they had more of last month, they really talked about how they are going to assess the incoming economic data, and they kind of are going to just make a decision from there. So we'll see what happens when it comes to that aspect. But I do think also with looking at the dot plot, which is another way to kind of get an assessment of over a long-term perspective where rates potentially can go. And it's showing here, and for this year, majority of the dots are saying that we're going to most likely be at 5% for the remainder of the year, 5.25. For 2024, it's showing somewhere around 4%, and then for 2025, it's showing somewhere around 3%. So we'll see what happens. But I think kind of looking at this data, understanding where inflation is at, understanding how it's affecting producer prices, also looking at core inflation, as well as what the Fed is doing. All of these different elements are important to look at. And, I hope that this video was informative for you all. Definitely, if you have any questions, you can always reach out to me with my contact information below. But I thank you all so much for watching this video. I really appreciate your time. Continue to please like, subscribe, and share. Don't forget to hit that notification bell so you can be notified every time I'm dropping content. And I thank you all so much for watching, and take care.